Okay, so this is a bullish breaker because we have the low, high, and then the lower low. And the bullish breaker is just a failed bearish order block. Okay, this is your bearish order block right here. It is the last up close candle before an aggressive move down. What makes it a failed bearish order block is because price came up and closed above the order block. The open, I'm pointing right here because the open of this bullish candle is the order block. The close is the rejection block. So this close above here, this close above the bearish order block right here, and then this close above the rejection block right here makes this a failed bearish order block. Okay, this is how you know that price is going to go up, because in this failed bearish order block you have a bullish breaker. Now, not only is this candle a part of this failed bearish order block, it is also a part of the bullish breaker. And because we have two consecutive up close candles here, that is not only the bearish order block, but it's also a breaker. Now, if you take the body, you will see once price goes up and closes above, it comes back in to retest this failed bearish order block and the breaker. Now, this is what makes this bearish order block a failed bearish order block, because price closed above. This is how we know we can trust that this is not going to sell. We can trust that it is going to buy instead, because it retests this bullish breaker. And then not only that, you have this in the range of a bullish order block right here. So price tapped into this and found support. Let's see what it looks like if we take the whole candle, where we find a respect at the consequent encroachment. The candle bodies are closing up here. So since this is a bullish breaker and a failed bearish order block, this area right here is the discount. Now, when you're bullish, you want to buy at a discount. So this area right here is the discount of the bullish breaker right here. Now, yeah, that's perfect. So now we're going to move along with a winning bullish order block. So we see what makes a bearish order block fail. Now we're going to see what makes a bullish order block win. So here, after the bullish breaker, we're going to have a mitigation block. Right after that bullish breaker, the mitigation block is going to be this low, high, or you could use this high, and then the higher low. See the higher lows, low, high, higher low. Now, in a bullish mitigation block, which will come after a bullish breaker, you're going to have a bullish order block inside of that bullish mitigation block. A bullish mitigation block, again, is a low, high, higher low. Now, in this, the bullish breaker is going, the bullish order block is going to be the last down close candle before a strong up move. See, these two are strong up moves. So here is where we'll have the bullish order block. Now, what makes this bullish order block work? Should I remove this? No. I'm just going to make this another color so that I don't get confused. Make it a darker blue, maybe. Let's do this for that. All right. So in this bullish order block, within this bullish mitigation block, what makes it work is, again, just like we talked about the open being the order block, is going to be the same thing with these down close candles. The open is here. So that there is indeed your order block. Now the close down here, this close, that's the rejection block. Okay. What you want to see mainly is price rejecting either from the consequent encroachment or the high, the premium in a mitigation block. You don't want to see it close below the consequent encroachment of a mitigation block or a winning bullish order block. You want to see it retest right here, the order block, and you want to see it reject the rejection block. Let me see this here, this area here is our rejection block, that wick, that close to that wick. And again, like back here, low, high, lower low, that bullish breaker, same thing. So that's what makes the bullish order block a winning bullish order block, because price is not closing below the rejection block, and it's not closing below the consequent encroachment from where the actual order block is. And then you see a rejection of the order block. That's what makes it a winning order block. And we already talked about what makes a failed bearish order block. We know that a bullish breaker is a failed bearish order block. So moving along, we're now going to see how a bearish breaker is actually a failed bullish order block. We're going to talk about the same thing, just vice versa. All right. So we got high, low, higher, high. This here, again, that's your order block. There are 2 consecutive bearish candles. It doesn't have to be 2 consecutive bearish candles. It could be any amount of consecutive bearish candles, or it could be just 1 bearish candle, as long as it shows strong momentum moving away in the opposite direction. That's what makes it order block. So with this, again, the open is the order block. The close is the rejection block. Now this is a bearish breaker. Turn this order block into a failed order block, a failed bullish order block. So then it turns into, these 2 candles end up being the bearish breaker. The reason why it is a failed bullish order block is because, see the open, price came in and it closed below there. It closed below the order block there, and then finally it closed below the rejection block there. See, if it was a working one, price would have been rejecting it, right? But instead it tapped back into this SIBI, and then this right here is also a change in the state of delivery. Now, just because it's not a close below a wick or whatever, the fact is that this is a gap, and then this gap came and closed over that, and then it taps back into it and comes back down. Also, wicks are gap. We got to remember wicks are gaps. So you would take that like that, or even this like this. But I'm not going to get into that part right now. Just know that this is now a bearish breaker, a failed bullish order block. Price came back in with strong momentum, close over that. Now, to go back over here just to take a quick look at something. We already know wicks are gaps, so when that happened, that wick came up and then it closed above, you should already be knowing that, okay, this is not going down. Same thing right here. That wick came down, closed over, you already know this is not going up. All right. So then, now that we know what makes a bullish order block a failed bullish order block, it's when price come and close inside. What comes after the breakers? The mitigation. High, low, higher, high, high, low, lower, high. It's your mitigation. High, low, lower, high, mitigation. High, low, lower, high, mitigation. High, low, higher, high. Bearish breaker. See there. All right. So after this, in your bearish mitigation block, you will have a bearish order block, which should be a winning order block. One way to know is, let's take this right here. This is the last two up close candles. All right, And then above here is the rejection block, of course. We know that. Now we know that. So what makes this order block a winning order block in this mitigation block is that this open here, this is the order block. See how it came back there? Then this is the rejection block. You should only be seeing wicks at the rejection blocks. You should never see a candle in a bearish order block. You should never see price closing a candle's body above the rejection block. And if we do happen to go above consequent encroachment of the order block, you want to see weakness. When there's a bearish order block and you see price push up, you want to see it close with weakness. That's how you know that price is going to continue down. So with that, you see in price respect consequent encroachment. It tries to push up. The candle bodies is not going up to the rejection block. It's rejecting the rejection block. The wicks, they're fine. That's just showing you another bearish breaker, which is, we know that our bearish breakers are failed bullish order blocks. Okay, so play this over and over again, Brittany, so you can see and know and understand how to read these charts.